Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Hey everyone, welcome to Linqo. Today we're talking about the latest on earnings expectations for some of the biggest names in the stock market. So let's dive right into it. As you know, last week we saw a pretty interesting trend when it came to quarterly reports from S&P 500 members. Now, this week we've got a whole new batch of companies making their way through that Q3 tally. And one thing that stands out is the expectation for Q3 earnings growth. According to Zacks Investment Research, the overall picture is looking pretty positive, with a plus 5.3% increase in earnings from last year's same period. But if we break it down further, the average revenue growth is actually plus 6.1%. Now, that might seem like a small difference, but when you're talking about the S&P 500 index as a whole, every little bit counts. And speaking of the S&P 500, there are some interesting trends happening here. For example, have you noticed how Q3 estimates have been moving higher over the past few months? That's right, folks. It looks like we're starting to see a shift in the way companies are thinking about their earnings expectations. And it's not just limited to Q3, either. We've also seen some positive revisions for Q4, with estimates for 7 out of 16 Zacks sectors increasing lately. Now, I know what you're thinking. Is this really something to get excited about? Well, when you consider that those two sectors alone account for more than half of the index's total earnings, it starts to look pretty promising. Of course, there are still some areas where estimates are under pressure, like consumer discretionary and medical. But overall, it seems like we're entering a period of optimism for the stock market. Now, let's talk about two companies that caught my eye this week, Nike and Carnival. Both of these big names have made their way through Q3 earnings reports, and what did we see? Well, for Nike, the picture isn't looking too great, a decline in earnings due to an elongated recovery. But Carnival, on the other hand, is bucking that trend. Carnival Corporation is actually expected to report some positive numbers, with earnings per share up plus 3.9% and revenue growth of plus 2.3%. Now, I know what you're thinking. Is this just a one-time thing? But according to Zacks Investment Research, analysts are forecasting a major revenue breakout for this company in 2025. Now, I'm not saying that Carnival is the only stock worth keeping an eye on, but it's definitely something to consider. And if you want more insight into the world of earnings expectations, be sure to check out Linqo's weekly earnings trends report. Speaking of which, our team of experts has just released a list of 5 stocks with the greatest probability of gaining plus 100% or more in the coming months. Now, I know that's a pretty bold claim, but one stock that really caught my eye is a satellite-based communications firm. Space is projected to become a $1 trillion industry, and this company's customer base is growing fast. That's it for today, folks. Thanks for tuning in to Linqo.